Okay. Good evening, everyone, and welcome to. Okay. All right. I can see Michael is connecting from Lagos. He said it's good to be here. Salahuddin Ridwan from Ahmadu Bello University, BU Zaria. How is Zaria? All right. We're expecting others to send in their names, location, and what they hope to learn or take away from the session today. I'm sure while filling the form, we give some shared their questions, some give their feedback regarding the subjects that we'll be discussing today about the new tax laws. So the myth and the truth actually from about the new tax laws that will be enforced in 2026. Right, Sumbo said is connecting from Lagos. Oh, you guys are missing the other part. That's what you hope to learn from the session today. Okay, Sost. I'm sorry if I'm not pronouncing your name well. Okay, I'll prefer to call you Funaya. If Funaya is connecting from Lagos and she hopes to learn more about the tax law, how it affects our income, and how to be smart to avoid overtaxing. Great. Olawale is connecting from Lagos and is hoping to get a practical understanding of the tax laws and, more importantly, a framework to implement personal and business tax filing. That's great. And I'm sure our facilitator is ready to share the insights, everything we need to know and understand about the new tax laws. Okay, so just few housekeeping before we go ahead with the session. For us to have a smooth session today, would okay, Mike said he's looking forward to learning and understanding the new tax laws and how to go about it to avoid any penalties. That's great. As good law abiding citizen. Okay, so back to our housekeeping. Please make sure you keep your microphone muted. If you need to speak, you can raise your hand using the hand icon below your screen, and when it's time for you to speak, we would ask you to mute. And if it's very urgent and you feel you might forget the question or what you need to ask, kindly use the chat box. So for any comments, questions, use the chat box. And if you have something bothering you about the session or something that the facilitator have said and you need to get clarity on anything, there's going to be a session for the question and answer, and then you can then ask your questions. Eventually, you've asked the question during the session, it will be addressed during the question and answer session. Also, the meeting is being recorded. So if along the line you get cut off or you didn't join the session early, or for those that won't be able to join the call, the session is being recorded, and definitely you get the file, you get the recorded audio and video of the session. So going straight to the next. So my growth hub is this is a session organized by the community My Growth Hub. So who are we? We are a community of professionals where we are focused on capacity building, knowledge sharing, and collaboration. So our mission is to equip young people with practical skills, mentorship, resources, and networks that accelerate personal and professional growth through learning, collaboration, and community. There's one saying that life can't be done alone. You need to have people. You need to have people that you grow with, that you do life with, right? So that's our mission at MGH for short. So our vision is to build a vibrant and empowered community of over 1 million professionals by 2030, part of this is the capacity building and knowledge sessions that we have on quarterly basis. So what we do is we have knowledge sessions and webinars just like this. We have mentorship and peer learnings where we have peer learnings within the community. So we have clusters of professionals that we get to like learn and then get mentorship along the line. We also we also do skills development and career growth, have career growth conversations. We have access to resources and opportunities. So when we have first-hand opportunities or resources, we share within the community, right? And then there's this thing that they say that uh, uh, not jack of all trades now, about uh we also have fun. So there's this saying that that just keeps my mind about when you play, we work hard and also we play hard as well. So we have our quarterly hangouts as a community where we just unwind. We don't talk about anything work, just unwind and then have fun. So we are fun. Yeah, all work and no play, exactly. All work and no play makes Jackie dull boy, right? So all work and no play makes MGH members dull people, right? So we are we are fun people as well. So going straight to why the session matters. So why this session matters is we know that there's this rumor flying around about the new tax laws that will be implemented in 2026. People saying it's going to affect their finance, it's going to affect do this or do that. Like we've heard a lot of things. They're like, oh, there's something now. Another time we're hearing another thing. So we don't know which is true or not, right? So this session is to enlighten us and make us understand, right? To know how the new tax laws affect how we work and do our business, right? Also to have clarity and preparation for professionals and business owners. So for you to prepare ahead. So what is in for you as a professional and as a business owner, and then to make better decisions. One of the attendees mentioned that he wants to make better decisions. So for you to make better decisions from the understanding of this new tax laws. So, sorry, I said it's meant to be tax laws, right? So going straight to the next slide is our facilitator for today is on the call already. So I'll be reading his bio while he's getting ready for the presentation. All right, so Olukolade Ehinmosan is a legal practitioner with a strong passion for taxation, dispute resolution, estate management, real estate, and succession, and with developing interest in data privacy and cyber security. He obtained his a Bachelor of Laws degree with honors from the Femi Awolowo University, where he served as the pioneer director of research and president of the tax club, Obafemi Awolowo University. Olukolade works for the law firm of SPA Ajibade and Co. There, he has built a solid professional foundation in tax, real estate, and succession advisory and dispute resolution, providing strategic legal guidance to individuals and businesses on a wide range of regulatory and commercial matters. He is known for his ability to simplify complex legal and fiscal concepts, and he constantly contributes to public discourse through thought-provoking articles and analyses on contemporary tax and regulatory reforms. Beyond legal practice, Olukolade is passionate about mentorship, knowledge sharing, and positive collaboration. Please join me as we welcome our facilitator for today, Olukolade Ehinmosan. Hi, Olukolade.
Yes, good evening. Can you hear me clearly?
Good evening. Yes, I can.
Yes, thank you so much for the humbling introduction you have just given. Yes, I deeply appreciate it. And seeing that we have just a few minutes to discuss about the new tax laws here, I will seek your permission to go straight into what we intend to discuss right away. So I will start by saying good evening, everybody. Uh, those that are here and those that will still join. I just have to greet them in absentia at this time. Um, I would start by asking a question that I consider practical. If I ask you to be honest now, how many people here hear the word tax and immediately feel like somebody wants to spoil your day or somebody wants to steal something from you? Without even waiting to see hands raised, I would conclude. I can see one hand already. Mr. Olawale. Yes, I can imagine. What this means is someone even said it spoils the mood. And there are many reasons why people have these feelings. Many of the reasons, in my opinion, are valid. I wouldn't delve into those reasons right now because each person have their own reason. Maybe you may even be surprised that the person speaking right now may even have the same feeling too sometimes. But the law is what the law says. And so whether we sometimes feel bad about it, what is more important is not to be too angry or bitter, or not to be too scared, but to be knowledgeable, at least in the most basic of ways, about what the tax law says and the obligations or duties that we have regarding the laws. And that's exactly what this session is about. So we're not going to be dealing with unnecessary technicality or grammar. We're going to focus on understanding the tax laws basically, and in the process, dousing some of the tension that have arisen from misinformation, panic mongering, and so many other things we see on social media. I would also like to note that this session is going to be focused not on supporting or opposing the government, but on assuring us about what the law says so that we can know how to comply going forward. So now, having made that introduction, it's important to set an additional context to this conversation. And the context I would want to set is that the new tax laws are not exactly introducing new taxes. They aren't. That's one thing that we should note immediately. What the tax laws are doing is they are introducing a change to the laws that exist at the moment as we speak. These laws, not everything has changed or will be changing. And it is not everyone who will suddenly start to pay more taxes because of the new laws. Not at all. So some changes have occurred. And in fact, it is these changes that we importantly need to discuss right now. Now, it is also important to note that the tax laws are very wide. Some people, some non-lawyers that are my friends and acquaintances have requested for copies of the laws. And in some cases, I've shared with them. But the truth is that it is not easy for a non-tax law practitioner to take those laws and understand. They are not like storybooks. They are very technical and could be difficult to understand. So, though the laws are wide, this particular session focuses on people who earn salary, people who earn professional fees, people who earn commissions, people who earn honorarium. If we know what honorarium means, for example, some people who go to speak during an event and then they appreciate them with a token. That is an example of a honorarium. appearance fees, typically for lawyers, consulting income for consultants, business profits for business owners. And then if we are to even go a bit on the lighter note, what Soimpo will casually call small money. If you are on this call and you earn small money, this call is really for you too. You know, the issues that we'll discuss will pertain to what you need to know regarding the new tax laws. It will not affect others, but just business owners and professionals. Take note too, please, that this session is purely educational. I must be very honest with you, even though I really desire that it goes beyond pure education, but it just cannot be so, because every business have their peculiar circumstances. Every individual too have the same peculiar circumstance, and so it cannot be a personalized tax consultancy. We must note that where your situation is a bit deep and goes beyond the basics, professional tax advice is not optional at that point. It becomes a wise business decision. So having set the context to our conversation, we are entering the main point now. What exactly are the new laws? What are they? When some people hear about the new tax law, they imagine, not everybody really, but some people imagine that it's one big scary document, that there are some hidden provisions inside that will hurt every individual and business owner. But that's not true. In reality, it is a body or family of laws that contain provisions that some have been removed, that's relative, comparing them to the current laws. Some have been removed, some have been rewritten, and then some have been joined together with what is existing at the moment. So for example, if I'm to give a clear example for us to understand, currently, when I mean currently now, I mean between now and December 31, that's the next few days. That is what I call current or old regime. So when I say currently, just know that it is what is operating now. When I say the new laws, I mostly mean from January 1, 2026. So what you will notice in the current laws or the old regime is that for taxes that belong to companies, you have one law, Companies Income Tax Act. For individuals and business names, you have Personal Income Tax Act. For taxes that apply to goods and services, you have Value Added Tax Act. For disposal of capital assets, you have Capital Gains Tax Act. And it goes on and on and on. You even have Stamp Duties Act. So what it means is that the current laws have various laws for specific subject matter. And that has made it too fragmented. And sometimes people are usually confused that what exactly is the law that applies to me. But the new tax laws have now come to change the narrative. How? In the new tax laws, for example, all the laws have been brought together and fused into just 4 principal laws. And as a matter of fact, the one that pertains to the tax itself that we will pay is just one law, and it is called the Nigeria Tax Act. We popularly call it NTA, the Nigeria Tax Act. That is where you have all the taxes that we're going to pay, depending on your circumstance. And then we have one called Nigeria Tax Administration Act. That one talks about how the government will administer the tax law and do and relate with taxpayers, basically. And then you have Nigeria Revenue Service Establishment Act. What that one does shouldn't worry you at all. As we go on in this discussion, you will come to realize that the FIRS, many of you are familiar with the FIRS, Federal Inland Revenue Service. The FIRS will no longer exist. It will now be replaced by the Nigeria Revenue Service, NRS. So right from this conversation, if you're already too used to FIRS like NEPA, start getting used to NRS now, because you'll be dealing with the NRS a lot. And then some of us that know the Joint Tax Board now, in fact, already, it's not even from next year, already, the Joint Tax Board has now become the Joint Revenue Board. And the law that establishes that body is the Joint Revenue Board Establishment Act. So these are the 4 principal laws. I don't think you should really worry yourself about it. But what you should know is that unlike the current tax regime, these 4 laws have come to simplify the system so that we don't start checking too many laws to find what really applies to a particular situation. We just have to go to a particular law or 2, and then it makes tax administration very easy, and compliance, it makes it easy too. So we can compare what is happening to a house renovation, really. The new tax laws have not come to demolish everything, no. It has just come to fix some things in the house, like the walls, the broken walls, the windows, put some flowers in front of the house to make it palatable, and some other beautifying and structural issues. So it does not come to demolish at all. There's nothing to fear in that regard. The next point now quickly is, well, I have the point here about what the government is trying to achieve, but then I think I could do well skipping that, or just to make a short reference to it, that my reading of the tax laws as a tax expert, I can see very clearly that the new tax laws have not been introduced. I mean, I need to be very careful now. This is my neutral opinion, and it is my sincere opinion too. The laws have not come to impoverish anybody. No. What the laws actually want to do is, currently, the people that are captured in the tax net, that's the people that the government knows, they are very few. There are many people in Nigeria that the government don't even know their name or their address, or whether they are into business. So the new laws have been introduced not to punish anybody, not to tax anybody really, but to make sure that the government is aware of everybody, both those that are doing business and those that are not. So in essence, technically, we say that the new laws have been introduced to widen the tax net, so that when the government looks from afar, the government says, "Oh, good. That is Miss Abigail. She does the business of construction. Oh, this is Mr. Kennedy. He does the business of beverage distribution. But at the moment, his income is not so much. So let's still hold on a bit for him. Let him continue making his money. When he has expanded, then of course we come for him. Of course, we believe that he will come and comply." That's the idea of the tax laws. They are not meant to start taxing everybody arbitrarily or indiscriminately. Not at all. And then the new laws have been introduced to track people better, like I've said already, and to reduce leakages. If I'm to illustrate, this is an example that I understand it with, and I believe you can understand with me. Let's assume that everybody on this call belongs to one community. In this community, everyone is expected to pay for electricity. Let's say we're supposed to pay 100,000 naira per year. But then what we've now noticed is that only 3 houses out of about 40 houses pay for this electricity. The remaining people don't pay. But every house in that community keeps enjoying electricity. You would agree with me that that is a completely unfair situation. Those people who are paying, they are being impoverished. What the community can do is to put things in place to make sure that everybody that owns houses in that community is captured, and then everyone pays his own fair share of the electricity bills. In that way, it will be a fair system. That's exactly what I see that the tax laws want to accomplish. Now, having known why the tax laws have been introduced, let's go proper into some provisions. We will not be quoting sections here because that would get boring or too confusing. We'll be talking about what the law is itself, our principles. So the very first thing we'll be talking about is TIN, tax ID. What exactly is the issue with this? Recently, it's become almost viral that, hey, if you don't have TIN or tax ID, there's problem. Oh, your account will be frozen. Some other people are saying that no, don't open an account. Oh, if you open an account, the government will be taxing you and will be debiting you automatically. There are some other things that many of us may have heard already. But the question is, what exactly is the truth regarding TIN and tax ID? The first thing I will say is the most simplistic information. TIN is not tax. Just like BVN is not tax. BVN is a way to identify a bank account holder. Similarly, TIN is a way to identify an individual or a business. There's nothing more than that. Oh. It is just a way for the government to know that you exist. Simple. TIN does not involve debiting automatically. TIN does not involve, lack of TIN does not involve freezing your account. No. It is just for you to know that it is your duty to ensure that you obtain your TIN from the government. Now, that is tax identification number. Under the current regime, tax identification number is used to identify both individuals and businesses. But the problem with TIN right now is that me as an individual, you may be surprised that at the moment as I speak with you, I may have like 4 TINs. And so it becomes so confusing, even to the government itself. The government cannot exactly track who I am. They cannot track my activities. They can't even track my income. They don't even know whether I'm alive. So that's a problem with the current system. And so the new system, where the TIN discussion is coming from, is that the new laws want to ensure that there is a harmonization of the tax identification metrics of every individual or every business, such that there will be nothing like an individual having 2 tax IDs anymore or more. Once you see Olukolade Ehinmosan, what you see is 1 tax ID. And the information that we have now is that the plan is to make that tax ID our NIN, so that we don't get to be tinkering with numbers or be doubting whether we have another tax ID apart from our NIN. So that's exactly what is happening. And for businesses, that is business names and companies, their tax ID will, when the plan has been carried out, will be their CAC registration number. No need for a different CAC registration number and then a different tax TIN and then a different VAT registration number. Sometimes people get confused that how many numbers now? You know, and then it is even difficult to put them in your memory. And the current law says that it must be on your invoice. So you see that the new laws are trying to simplify this identification procedure. And it is very important. Talking about what you should know as professionals and as business owners, my takeaway is ensure that you have your tax ID. Simple. If you have your TIN right now, visit the tax office or engage your tax consultant to visit the office for you and do what they call regularization, so that it will be clear that this is your tax ID and not any other. So that is what is important for every one of us here. And then we must remember, unlike the current laws where enforcement is a bit lenient, they're just playing with us. The new laws, enforcement, this is not a threat, please. This is just a way to inform us or remind us that we need to take enforcement serious. So from next year, if you are running a business and you are registered and you don't have TIN, or you are just, it means you are running facelessly. You don't want the government to see your face. That might not be a good one, because they are upgrading their digital tracking systems. So there's no point hiding, really. It is just to come out and do the needful. When you do the needful, then whatever happens, you can decide to hold your government accountable. But then do your part first, so that they don't come and say they want to arrest you or they want to investigate you, and then you start to have some problems tax-wise. Another important part that we need to note before I forget is that there's a part of the new law that is now very important again. If you as a company or a business, let's say for example, the Growth Hub. The Growth Hub is a company that does, let me see, they are into restaurant business, and then they engage a company, Afri Artisans Limited, to help them construct another property at Ibejuleki. But then Afri Artisans in this illustration has not registered for TIN. They don't have a TIN and they are unregistered. They just call themselves that name. The implication of the new laws now is that the Growth Hub will be found liable, because it is a crime now to enter into business or to award a contract to an unregistered entity. If you award contract to an unregistered business, the fine is a bit heavy. It is 5 million naira. Some people don't even make that as profit the whole year. So that amount is not to scare us, really. It's just to realize that you need to register, and your people you are dealing with, need to be registered too. Some people have asked, so how will I know it's registered now? Do your basic diligence and ensure that you have your legal consultant with you. They know how to do these checks. They can check to confirm whether this person is a registered business. This person has been registered for tax purposes. We have nothing to fear. So these are the issues. I don't think I need to overflog that. Going ahead, we have seen from TIN now that TIN is not automatic taxation. No, please, it is not. And TIN is not deductions, monthly deduction. No. TIN is not tax. TIN is a way to identify you and I. It is like BDN. The next point is personal income tax. What is personal income tax? As the name implies, personal, person. We are person. Although under the law, companies are seen as persons too. But for now, we have to look at persons in the context of natural persons, humans. So now, when you talk about personal income tax, it is the tax that a person, a human, pays on his personal income. Talking about persons, natural persons, now humans, we can say that humans can be company directors, they can be employees of the company, they can be managers, they can be normal staff. Humans can also be business owners, and they can also be freelancers. So you see now that this personal income tax area is very crucial for us to understand. If you look at the current tax laws, that's not the new one now, the current tax laws, the rate of personal income tax is graduated. If I'm to make it a bit clear, there's nothing on my screen now to show, but it's okay. What the current tax law says is if you are earning 300,000, for example, and assuming 300,000 is your net income, that's your net salary per year that will be taxed, then you'll be taxed at 7%. And then the next 300,000 again. So let's assume that you are paying you're earning a net salary of 600,000 per year. Assuming though that money is very small now. What it means in the current law is that the first 300,000 will be taxed at 7%, and the next 300 will be taxed at 11%. And then it goes on and on and on, so that I don't bore us. The point is that the current tax laws are not practical and do not align with current economic realities at all. Because I mean, how many people earn 300,000 naira per year? Yeah, extremely few. I'm talking about inflation. Inflation has eroded almost everything. And so if you see here, for example, it says people who earn typically above about per year. Let's say you earn about let's say you earn about 5.56 million per year. Your tax rate would be around 22%. That is extremely high for somebody who cannot easily buy a Toyota Corolla car. You can imagine. That is the current laws. But the new laws have now come and say, no, that is not in line with the current economic realities. So by the new law, as we may have seen in a lot of places, it is true. If you are earning 800,000 naira net income, remember, not gross income now, net income per year. Why I say net is many figures would have been deducted from that amount you earn gross before it becomes your net personal income. So if your net personal income is 800,000 naira, your tax rate will be 0%. You are really tax free. We realize that many people that fall under that bracket are really the poor people. They don't have much. They will not pay any tax. And then the next one, if you are earning around 3.8 million net income per year, you are paying around 15% or thereabouts, even less really. And it goes on and on and on. The point here is that in terms of personal income, what the new laws have come to introduce is for the rich people to pay more tax. No doubt. I will not lie to anybody who is rich. Those that are very rich in Nigeria now, they will pay more taxes. But those that are not rich, middle and low income earners, they are paying less taxes according to the new tax laws. Talking about how to determine people that are rich. Really, if you are earning 50 million and above per year, you are very rich. You should not even be asking for too many incentives at that point at a personal level. they consider such persons as rich, and then they pay more taxes. But under the current law, such persons pay similar taxes as those who are even earning about 6 million per year. You can see that the current laws were inequitable. So many inequities in the personal income tax rates, but the new laws have come to correct it. And then there's now one important thing that the new laws have introduced too. Yeah, I see a question now, but I think later we can address those questions. Am I right, Mr. Olajide? Okay, yes. So another point
Yes.
that the new laws have introduced, thank you, is there's now what they call rent relief allowance. What does that mean? Rent, as the name implies, is for those of us that are staying in the rented accommodation. So what it means is that the rent relief allowance allows you to reduce the tax you will pay by the amount of rent you pay. So for example, what the rent relief allowance is really saying, in essence, is if you are paying rent, let's say you are paying rent and your rent is about, let's say, looking at Lagos realities now, your rent is about let's say 1 million. You're living in a self-con and you are earning 1 million. Now, the rent relief allowance is 20% of your rent. You will be able to use that 20% to reduce the tax you eventually pay. So that is the rent relief allowance. But it is not claimable automatically. You must have your documents. And that is where documentation is so important. You must have your documents. So for example, your tenancy agreement, it will be good for you to have it. The payment receipt for your rent, it will be important for you to have it too, so that you can declare to the authorities that truly this is the amount you are paying as rent, and then you can use it to validly reduce your tax liabilities as a person, as a human, not as a company now. We must note that the new laws consider lying, let me put it that way, lying, falsifying records. They take it very seriously. So if, for example, you go and declare an amount that is above the rent you pay, they will believe you at first. They will allow you to claim it. But if they find out eventually, the fine you will pay sometimes is about 200% of the amount you claim. So they trust you, but if they find you falsifying records, it is very critical. So I think that point is already clear. And then another point I would like to make is for those that are in salaried employment, pay as you earn. The pay as you earn system has not changed at all. Your employer still has the duty to withhold or deduct the amount of tax you are supposed to pay and pay it on your behalf to the relevant tax authority. That is what employers do. And if you are a business owner here, please know that it is your duty to pay for the personal income tax of your employees. If the authorities find out that some employees are not paying taxes, they will not immediately go after them. They will go after the business itself. So that obligation must be considered seriously. But one more thing, there are some employees now who have side hustle. Those side hustles are not known usually to the principal employer. So the question is, what happens to side hustle? How will I account for my side hustle? Now the truth is, under the current law, you may be able to escape, because most times the government relies on your payee alone. So once your employer has paid your payee, you just like, it's okay, it's complying with tax. But now you will have an obligation if you are earning somewhere if you are earning from sources outside your principal employment, you will have an obligation to file your tax returns annually at the end of the year. And when you are filing your returns, you will need to disclose that additional income you have earned. If you don't disclose it, you may be taking too much risk. The truth is that there's the possibility that you will not be caught, but there's also the possibility that you can be caught. So it's about transparency, really. That's what I think. It is not necessarily about complaining first. It's about, do I know what I'm supposed to do? In this tax returns form that I'm filling, where there is a column for imputing my additional income, am I putting it accurately? If you want to put additional income accurately, it means that you must be very good with your record keeping. And that is where a popular information that has been going the rounds is now important. When you are transferring money to somebody or you are receiving money, the narration should be clear. It's not as if you cannot eventually defend it, but it's better for documents to show, because documents speak for themselves. But if documents don't show, you will have to do what they call shalaye. And sometimes shalaye is not straightforward. They either accept it or reject it. And when they reject it, you may have to go the long way to prove what you are supposed to have done through documents. So it's important that you keep your records. Keep your records. Talking about businesses now, business owners. Now, for businesses, you have businesses that run as, oh sorry, I may have missed freelancers. Freelancers fall under a similar category as those who earn additional income apart from their principal employment income. So you must keep records, because we understand sincerely that the money doesn't come in a straightforward way. Sometimes you receive, you earn 100K. At times you just blow 5 billion. At times 15 million. At times 20K. You know, it doesn't come in a coordinated pattern. So because of that, you must keep your records so that at the end of the year, you can disclose your income accurately, and nobody, no tax authority or official will come and meet you and start to tell you that you are supposed to pay a tax that you are not supposed to pay. Your record will show it clearly. Now, come on, I didn't earn up to 100 million this year now. Why are you saying that I should pay taxes? See my documents. It is documents that show. So if there's any major lesson that we are taking away from this conversation at this point, it is the fact that, I beg, keep your records. Keep records. Keep it as though your life depends on it, really, because it may depend on it financially. Now, for businesses, a business is generally, they can either be business names or companies. Business names, you have Olukolade Fashion Concept, Mythos Shoppers. For companies, you have the Growth Hub Limited, Kazim Kende PLC. So you see, they are businesses, but they have different structures. Now, the ones that have ventures, concepts that don't have limited in front of them, they are mostly called business names. The ones, I can say agency, good. Now, agency, if I get it right, if it's an agency company, of course, it will be a limited, because the company will have limited in its name. If it's a business name, it will still be a business name. If it's an individual who is an agent, that person is likely a freelancer. Now, for a business name, the law considers the business owner or owners as the same as their business. That is because a business name is not seen under the law as a person. Remember I said earlier that companies are seen as persons. They are artificial persons. We are natural. A business name and the owner together. What it means is that, remember I said that a natural person, humans, pay personal income tax, right? That means a business name also pays personal income tax. But a company pays company income tax. So for short form, we can say personal income tax is PIT. Company income tax is CIT. I don't know if we get, I believe we get to that point. Now, talking about changes under the law with respect to these two business forms, we must know it is very important. So, talking about companies, the law as it will be, I have to be very careful here, and I just hope you get me right. I don't want to go into any controversy going on right now, but I just say the law, the way it will be, the way the law will be from next year. As a company, if your gross annual turnover is 100 million naira or less, your CIT, company income tax, will be 0%. Gross annual turnover is not profit, oh. It's not profit, please. It's not profit. Your turnover is what comes in. So, for example, the Growth Hub Limited is into restaurant business. In the whole year, they made a profit of 15 million naira. But all the money that came in was 1 billion. Do they qualify for 0%? No. That's because their gross annual turnover is 1 billion, not the 15 million profit. But take note, the gross annual turnover provision is not on its own. It has a twin brother. And the twin brother is, if your fixed assets is 250 million naira or less, then you will pay 0% CIT. Essentially, you will be regarded as a small company. So to recap, the twin brothers, if your gross annual turnover is 100 million naira or less, 0%, my apologies, 100 million naira or less, and your fixed asset value is 250 million naira or less, then your CIT will be 0%. In addition, companies are supposed to pay a particular levy known as development levy. Under the current law, companies pay tertiary education tax, TET, information technology tax, NIDA levy, police trust fund levy, and NASENI levy. Those 4 levies, they pay them as companies. But the new laws now decided to fuse these 4 different taxes or levies payable by companies into one, called development levy. Now, that development levy, a company that is a small company, as we defined just now, will not pay it. It will also be exempted. The idea is they should go and make their money. They should not disturb themselves with paying taxes yet. When they make money, they can come and chat with the government. But for now, they still need to relax. Mr. Olajide, please, as I discussed, once I'm overshooting my time or I'm getting close, please alert me.
Yeah, I left a message.
Oh, okay. Thank you very much. I've seen it. Yes. So, both other points is important. Yes. Another important point is that under the current laws, the current tax laws, capital gains tax, which is typically paid on transfer of land, when you sell your land or when you transfer your shares, those are typically the tax that follow capital gains tax. Under the current law, the tax rate is 10%. 10%. But under the current laws, it is taxed per transaction. But under the new laws, it is not per transaction. All the capital gains tax transactions that you've had during the year, they will bring them together. And then the net capital gain is what will be taxed. And the rate of capital gains will be the rate that applies to you as a person or you as a company. So if, for example, the company does not make turnover up to the amount we said, essentially, if the company is a small company, the CGT rate, that's capital gains rate, will also be 0%. That's the idea. If it is an individual, if the rate that applies to me is 15%, that is the CIT rate that will apply to me too if I dispose land or I dispose shares. That's clear, I think, for the purpose of this discussion. I have less than 2 minutes left. Let me quickly jump into VAT, which is very common. Now for VAT, the rate remains 7.5%, but there are some new items that have been brought or transferred from VAT exemption to zero rated. That's a bit technical. And that's why about on record keeping, my second advice to every business owner here is to engage an expert. It's not all of them that are costly, really. Some maybe even be your family members. They will assist you. It is important for you to be properly guided. Now, what's the advantage of being zero rated is that unlike VAT exempt, which does not allow you to claim any VAT credit, input credit, when you are dealing in an item or a service that is zero rated, it allows you to claim input VAT credit. So that's a big advantage. It's important for you to know whether the business you are doing or the service you are rendering falls under VAT exempt or it is zero rated. Examples of zero rated when it comes to professionals is exported services. When you render a service to a non-national company, a company that's abroad, an overseas company, and the company didn't come into Nigeria at all, you render that service via electronic means. That's exported. It is zero rated. Previously, it was exempt from VAT, but now, because it is zero rated, it allows you to claim input VAT credit. That's it. I can see my time is up, really. So I will just, in all humility, stop here and entertain questions. Perhaps questions will elicit areas that I still plan to touch along the line. Thank you very much.
Thank you very much, Mr. Olukolade. That was really insightful. I like the way you even broke down those subjects, the things that for us to like understand. Thank you very much for that. So going straight to our questions, if you have any question, use the chat box and our facilitator will be open to answer your question. So I have one question here from Bushra. She said, so how will the taxing authorities differentiate between a business owner and non-business owner, a professional and non-professional? So you talked about taxes and accounts. So how would the government or the authorities, that's the NRC. I think that's the new name now, no longer FIRS, right? So
That's good,
how would they
NRS.
differentiate? Yes, NRS. So how would they differentiate between a business owner and non-business owner, and also professional and non-professional? So how would they differentiate them?
Thank you very much for that question. Let me go straight to it. Now, a foundational point that I must establish on this question is that the NRS it deals with federal taxes. So that's the NRS deals with CIT, VAT, and withholding tax that pertain to companies. For individuals and business names, it is the Internal Revenue Service of the state that handles their income tax affairs. So, for example, if the business name is in Lagos, it is the LRS that deals with it. If it's Abuja, FCTIRS. Now, having established that foundational point, you see, I mentioned that the authorities are upgrading their digital technological advantage so that they can establish these facts. Now, if you are a bank account holder, the account has a name for sure. The authorities have access as a matter of public policy and public interest. They have access to this information. They have access to other information from different other agencies. In fact, as time goes on, they will even have access to information from other countries about you. So the point is that when an account says Olukolade Ehinmosan, that's a personal account. It is me. If an account says Olukolade Ventures, that's a business account. Now, that is on the surface. If I get the question correctly, when in the event that a person is invited for investigation or for clarification, the person can now in the process clarify whether he has been using his personal account for business purposes or for personal purposes. But the point is, the authorities will have to presume what they see. The records will have to speak for themselves. They will not decide that a business name account is for a person or for another company. That would be wrong. I don't know if I get that question clearly.
So Bushra, you can respond in the chat. So going straight to the next question. So adding to the above, the one you just answered. Okay. So Bushra mentioned that, yes, it's clear. Thank you.
Thank you, Bushra.
Adding to the above, including freelancers or an employee. Sorry, I missed that. Or an employee that is paying tax to another country but is living in Nigeria. So, for instance, you're a freelancer and you're working for a company not in Nigeria. So, how do you balance that? Is it that and the person is the company is paying tax to the company there? So, how do they get to like balance it?
Thank you very much. That question is one of the technical areas of tax, but I will answer it in the most basic way I can. Now, this question pertains to a concept called tax residency. In the current laws, the tax residency is a bit, should I say, compact or constricted. But the new laws have expanded the tax residency rules. What the new laws say is that if you are a freelancer, I presume that this freelancer in question lives in Nigeria, but works remotely for an overseas company or business. What it means is that if you are a Nigerian, you are living in Nigeria, but you are working abroad remotely, you are tax resident in Nigeria. Your personal income tax is payable to the Internal Revenue Service of the state where you reside. Clear. The other country where the company you are working for is situated, I would wonder what kind of tax they would want to collect. Personally, I would wonder. But peradventure, the tax has a bearing on your income. Then another factor to consider is, does Nigeria have a treaty or international agreement with that country on how to treat such income? If there's an agreement, the terms of that international agreement between Nigeria and that country will apply. Most times they have that agreement that if this guy works for you in a company for you, just leave the tax for me. Oh. In a similar way, if there's anybody like that in your own side, I will leave it for you. There could be that agreement. But if the agreement is not there, then the person may have to be subject to the laws of that place, because you work for a company that is incorporated in that location. But at least my belief is that that question is based on a freelancer who lives in Nigeria. The person will have to pay taxes to Nigeria because he resides here. And personal income tax is based on the residence.
All right. Thank you very much. I hope that's clear. So, another question, what of those earning above 800,000 per year, but less than 3.5 million per year?
Okay, I like the question. I think the person is just asking straight away for the rate. Okay. For someone who is earning around 3.5 million per year, the tax rate is not exactly, because it is graduated. What will happen to the person's income is, if the person's net income is 3.5 million, now the first 800,000 naira out of that 3.5 million net income will be taxed at 0%. Now, if you remove 800K from 3.5 million, my mathematics is correct. I think that would be that's tough for me. That would be is that 1.8? No. That's typical for me. Okay. 3.5. Okay, that would be 2.7. Thank you.
2.7.
Yes, 2.7. Thank you, Mr. Duro Larry, for assisting my life in mathematics. So now, the remaining 2.7 million will be taxed at 15%. That's net. Assuming you've also removed your rent allowance and everything, your rent relief allowance that I explained then. That's the rate that applies. So it keeps going that way. It's a graduated thing based on the amount of income you earn. The higher you earn, the higher your personal income tax. See, that answers it.
Yes, thank you very much. So the next questions, like the two of them, I'm going to merge them because they are the same. So will NIN serve as tax identification number, as some information has been going around about it? So having your TIN or NIN and NIN merged, how true is that?
Thank you very much. Yes. To my knowledge, that is the ultimate plan of the tax authorities. Yes, they plan to consolidate those identification metrics so that one person is not identified with two or more metrics, and then it gets too confusing for even the person or the contractors or even the government. Conveniency is what matters, and interestingly, conveniency is a cardinal principle of taxation.
Thank you for that. So there's this, before the session, I listened to different stories and news, and the chairman of the fiscal policy group or committee. So the next question speaks to that there is a gazetted copy that says gross turnover of 50 million for small company, but there are some information that we hear that it's 100,000, 100 million for small company. So we don't know which of this information is true or correct. So I don't know if we should follow the editorial copy or the gazetted copy.
Thank you very much for this question. Let me tactically answer, because it's an area that I want to speak what the law says, but at the same time I don't want to wear the garment of controversy too. So now the thing is, it's been established that there are some irregularities in the gazetted copy. What was intended by the National Assembly was, in this case, 100 million. But in one of the copies that was gazetted, it is 50 million there. And that's why when I was explaining initially, I mentioned that talking about what the law intends and what I see that the law will be eventually, it is that 100 million. But then I also must make a point. There are two scenarios where 100 million naira is mentioned in the law. Or should I say at least two scenarios? But two scenarios are critical to our conversation now. The first scenario is, how do we define a small company for tax purposes? The law says that if it makes gross annual turnover of 100 million naira or below, it's a small company. Remember the other twin brother, 100 million naira and below, and fixed assets of 250 million and below. That's a small company. And for tax purposes, it will be taxed at 0% CIT and exempted from development levy. That's the first scenario of the 100 million. It pertains to companies. The second scenario, according to the law, pertains to small business. Now, a small business is one whose gross annual turnover is 100 million and below too. But the interesting point there is that for small businesses, they are not exempted from income tax. No. They are exempted from VAT and WHT compliance obligations. So in essence, if a business does not make more than 100 million gross annual turnover, the law says, relax. We know you are trying your best. Just calm down. Leave VAT and withholding tax for the big boys. For now, just do your business. When you start making 100 million gross turnover or more than 100 million, we'll see you for VAT and withholding tax. That's the second context to it. And I think with this explanation now, I think I've addressed it very well. Another point that I should quickly address, pardon me please, is I need to make this point because it's a knowledge area that I don't see regularly. I see it only on a few accounts on social media. The new withholding tax regime, or if I go to the new one, the current withholding tax regime, not current, sorry, my apologies. In a withholding tax regulation was introduced in 2024. Now it's part of the tax reforms, but is not part of these new laws. So it's currently effective. But many people are still influenced by the regime before that law was introduced. Now, before that law was introduced, when it comes to withholding tax, if I withhold part of money I pay to the growth hub for service they render me, that money I'll go and pay to the authorities at withholding tax. When they issue me receipts, I will now come and give the growth hub. In essence, growth hub has to wait until the authorities issue withholding tax receipt before they will collect it and use it for their own benefit. Many a time, people don't even claim it anymore because the authorities will not even issue it. Some people will not even remit it to the government. And so that was occasioning multiple taxation because I will withhold 10% from the growth hub as a company I call it withholding tax and say the law says I must withhold it from you. You say, okay, no allow, take it is the law. But I did not bring receipt to you. So when you are paying your tax eventually, you will still pay it again. So in essence, you have this double burden. So the new regulations now came and say, okay, we understand. This is rubbish. We don't want it to happen again. So whenever I withhold money from the growth hub called withholding tax, I that am deducting it must issue receipt to the growth hub immediately in my letterhead, showing that I withheld the growth hub money. Now, that receipt, the growth hub can take it to the authorities eventually and use it to reduce its tax liability. The authorities will allow it and say, yes, good, thank you. So the authorities will now come and chase me after because they have the receipt that I issued for the withholding. They don't come and chase me. Mr. Olukolade Limited, what's happening? The record here shows that you withheld 10% from the growth hub. Where's the money now? Have you eaten it? So the point is that the new regime has now made withholding tax also good for those that they are withholding it from. I thought to mention that point.
Thank you very much for that. So we'll be running through the questions very quickly. So so as an individual, I have a TIN. How do I get a tax consultant for regularization?
Thank you for the question, but I think that's really a personal business decision for you. The truth is there are many tax consultants. Yeah, there are many. Tax, importantly, is it cuts across accounting, economics, and law at the barest minimum, those three areas. So usually when you're engaging your consultant, you should engage somebody who can afford you the accounting aspect, yes, and the legal aspects. Always very important. Mostly, I can give you an idea. What people do is they ensure that the person they engage or the persons they engage are good at the accounting side and the legal side. Because the law, knowing what the law says, I must admit, with all humility, can be very tricky. Sometimes you just read section 5 and you say that section 5 says this. It's not like that. You may be surprised that a holistic view of that section 5 will give a completely different interpretation. That's what the legal consultants will offer you. So I can't give you names. There are very many, but importantly, you should engage consultants who are good at accounting and law.
All right, thank you. How about POS deductions for cost of what I am buying and no way to put narrations? How will it calculate net income, especially for individuals?
I like that question. The question is very practical. It reminds me of something that I should quickly say. For one of the changes that the new tax laws have introduced is, you notice that at the moment, if I want to withdraw money from POS guys, 10K and above, it is the person, the POS operator, they will deduct 50 naira as electronic money transfer levy, EMT. It is subsumed under stamp duty. If the growth hub send money to me now to 10K and above, you just, before you know, whether some banks do it immediately. So other bank like GTB notoriously, like 3 days after, they spoil your money by removing the 15 naira. But the point is that amount now, the new laws now say that no, it is not the person who is receiving that should bear the burden. It is the person who is sending that bears the burden now. So the thing changes. So that, and it's to reduce the burden on business owners, so that business owners do not suffer more weight, more burden, more than they should. So having cleared that area, talking about areas where it is difficult to put narration in place. I think the best you can do, really, if I get you properly, the best you can do is to keep your personal record. I can tell you what I do. whenever I send money to somebody, or whenever these kind of POS transactions occur, I I try to I have a database on WhatsApp. I hope that it doesn't I don't lose it. I try to back up really. So I have a database on WhatsApp where I message myself. So once I do this kind of transaction, I already go and put it there. Or you buy for that deal. So that if any question comes up eventually, if I'm sitting with the authorities and the authorities are asking, what did you use this money for? I can easily tell them that I have record of social date that shows that I bought petrol. And even you guys, look at it now. The company I'm sending this money to, that deducted my money with POS machine, with the POS device, they are an oil company now. It says Chess Oil and Co. So Chess Oil cannot be selling, cannot be my brother, or they cannot be gifting me something. I bought fuel. That's why I paid them. So when you harmonize what you already have with that, it could work really. But then it's worse if you don't have any record whatsoever. That means you are leaving yourself to the hands or at the mercy of the authorities. And if you meet authorities, tax officials who are very indisciplined, they will use you as a TGIF or whatever.
Thank you. In the Oshodipo, I am going to share the new gazetted. It's on the website at. I'll share the link in the chat box while he's responding to other questions. So, for personal and business, what are the basic steps to take now to make sure all tax efforts are implemented, starting from registering a personal tax account or business tax account?
Sorry, Mr. Odagidi, I got lost at some point. Could you repeat?
Okay. So for personal and business, what are the basic steps to take now to make sure all tax efforts are implemented, starting from registering a personal tax account or business tax account? So which should we start with? Should it be a personal tax account or a business tax account?
Okay, if I get your question well, let me start by saying if you are an employee, you already have a tax ID. Likely because your employer already remits personal income tax on your behalf under the pay as you earn arrangements, payee. So you likely already have a tax identification just for you to ask your employer. But if you've not been an employee, should I say from the very beginning, perhaps at that point, yes, and you do business, you of course you need to register for tax purposes with the authorities, and it's very easy. Just walk into the nearest tax office and then inform them that you don't have any tax identification and that you need one, and that you also need one for your business too. It's very effortless. Sometimes for the business, some will say you should just draft a simple application for TIN and for VAT certificate, while some just do it for you effortlessly. But then truly, that your question discloses an important compliance point for everybody. You need to have your tax ID. You must be registered for tax purposes. It is very important. It is the starting point of your tax compliance journey. And the earlier you do it, the better.
All right, thank you. So another question, this is very a serious one. As a small business owner with only 2 workers registered on the business name level, employees are paid based on commission. How do I pay my employees tax, and how do I calculate the tax percentage to pay?
I like that question. Let me start by saying that, remember I mentioned earlier, please, with due respect to you, that when your tax situation is getting deeper, crossing the basic level, then engaging a consultant becomes a wise business decision. In fact, it is inevitable. So my advice here will be for you to consult a tax expert. But For the purpose of this discussion, I must make some points so that we don't waste this moment. Now, when you have people who you engage and you pay them commission instead of salary, a commission is typically earned by somebody who is an agent or somebody who is not an employee, what they typically call an independent contractor. Now, if you are engaging them on that basis, first of all, your documents must show that it is not an employment, because sometimes the law can see your intentions, that this guy is claiming that he's giving their commission or their employees is controlling them. Then in that case, sometimes the authorities can decide to characterize that transaction as an employment, even though you on your own have called it an independent contractor relationship. But then, what stops that from happening is where your documents are clear to the effect that these persons are not my employees. They've been engaged as contractors. Now, where you establish that point, the next thing is to know, since they are independent contractors, they are not my employees. So the law does not put the obligation on me to remit, to deduct and remit their personal income. Yes, true. But you will now ask, okay, since the law does not put obligation on me to deduct their personal income and remit on their behalf, could there be any other obligation that I have regarding these guys? Possibly, that is where withholding tax comes in. Withholding tax is not a different kind of tax. It is an advanced kind of tax, such that the government sees that there's a possibility that some people throughout the year, they may eventually escape from the net. So the government says, at all, 9 bad pass, bring that 5%. So the point is, you as a business that pays those people commission, you will have withholding tax obligations under the withholding tax schedule for such individuals who are rendering you service and you are paying them commission. The withholding tax rate is typically 5%. So before you pay them that commission, you are supposed to withhold 5% and issue them receipts that you withheld and remit that money to the authorities, the authority that handles their tax affairs, so that when they are on their own and they are filing their annual tax returns as individuals, freelancers, at the end of the year, they can show the authorities that receipt that they've been complying, and then eventually pay what they are supposed to pay. So I don't know if I've answered that to the best of the forum that this conversation presents us.
Yes, Michael gave a thumbs up. Thank you very much. So I'm going to call out. I'll call you shortly. So for a creative freelancer that has a brand name that's not been registered but reserved the name on CAC, so what would be the best? What would be the best? Registering as a business name or as a company?
Um, Hi, Jide. Sorry, Mr. Olukolade. Just quickly, Jide, apologies, my sincere apologies, but
Okay.
my question is kind of quite similar, right? I have quite a lot of questions, but let me just put it into one bucket. And this, Mr. Olukolade, thank you for the session. It's been very insightful. You've touched on the critical areas, and very, very nice. So now, what I just want to ask is this, which is similar to the question is, based on what you've most likely have studied, right, on the NTA and the NTAA, right, which one do you think is more advisable now, given the opportunities that are available under the new tax law, and the disadvantages too that are there possibly as well? Is it okay to register, in your advice, in your professional advice, is it okay to register a business name or a company? Now, looking at the exemptions, the income tax band, and also, a lot of, all of the other sections, So which, in your own personal advice, which is more advisable to register?
Thank you, Mr. Kolawole. Mr. Olajide, can I go ahead in view of the fact that Mr.
Yes,
Kolawole
please.
had said that he has a lot of questions, so and he put them in one docket.
Please go ahead.
Okay, thank you very much. Now, you asked if my professional advice.
Okay, your opinion, your opinion.
It's the same thing now, Kolawole.
No, I get, you're a professional, your advice comes at a fee, right? But I think your opinion, right, it should be somewhat free. So I just want to get your opinion on what it is.
Okay, fair play, Kolawole. The truth is, every business decision will be ultimately taken by the business owner. But what I can say is that remember that I hinted it earlier in the course of my presentation that one of the objectives of the new tax laws is to widen the net. Now, tax laws do not just come in isolation. The company wants to make money, but they want to make money in a decent way. So what it means is that the decision to register a limited or a business name will, in my opinion, be based not primarily on enjoying incentives, but primarily about what you want to do with your business. Let's say, for example, your business is a bricklayer. Him alone, he just wants to register a business so that he can be doing his bricklaying work. He doesn't plan in future to expand, to bring in anybody. It is him alone. He wants to be doing his own thing. Now, if that bricklayer goes to register a company because he wants to be enjoying 0% tax, 0% CIT, it's a good one. But the problem is, this person that decided to register a company because of that incentive, forgetting at least two things. One, generally, the cost of legal compliance for a company is more expensive than compliance for a business name. Remember that when we're distinguishing between small business and small company, we said small company will not pay CIT, but small business will not bother itself with VAT and WHT. Now, this means that whether you're a small company or not, you will still bother yourself with VAT and WHT. That means you will still be interfacing with the authorities for that. Two, even though you are not paying CIT, that's 0% CIT at development levy, your accounting records must clearly show that you are entitled to 0% as a company. And from experience, what an accountant will typically charge a company to prepare the records that the authorities will see and say, yes, they are different. Typically, a company's own is higher. Under CAC, a company's annual returns is marginally higher than a business name's. In fact, a company has the obligation far more than that. Apart from that too, a company, even though entitled to benefit from 0% CIT, the company director must still pay personal income. And you see, when the authorities are looking at the books and then they see that the director is trying to transfer everything to the company and is trying to technically leave some things out of his own pockets to reduce his tax liability, sometimes one has to be very good with the tax planning. And that's where you have to engage your consultant, because tax planning is key and it is based on peculiar business circumstances. But where the tax planning is not done properly, the authorities may they have the power under the law. They may characterize what you are claiming belongs to the company as truly belonging to you as the director, and then they will apply personal income tax accordingly. So you come to realize eventually that you are trying to escape from CIT, but you're actually paying PIT as the director. There are some expenses, for example, that a director may want to put on the company's head. For example, a director travels to Maldives, to enjoy, and he puts it in the book that he went for business conference or business trip. The authority may say, "Come on, Oga, which business trip be that one for December? You go enjoy, Baba. That expense, disallow it. Is his income. It's part of his income. He used to go and enjoy." So they may disallow it from the company and then disallow it from the person and add it to his income. And eventually, he will still pay personal income tax. Where I'm going with all these my stories and my vacillating is just to hint you that when you are registering a company or upgrading from business name to company, in my opinion, it should be based on strategic reasons, including desire to expand or something that you need to benefit from as a company that a business name structure will not allow you to benefit from. Ideally, too, in my opinion, you should already be comfortable with tax compliance first before you decide to upgrade. Because tax compliance and legal compliance generally for a company is more stringent and more burdensome than for a business name. So if you are a business name or an individual, if you set yourself up, establish your tax compliance structures well, and it is running like clockwork already, in my opinion, you are now justified to upgrade. Because when you upgrade, it won't come as a surprise anymore. You're already complying with tax. You already have a structure in place, and then it will flow, the transition will flow seamlessly. But I do not advise that one upgrades to a company or one registers a company solely because of the 0%. It may not go well as a business decision. That's the much I can say.
Thank you. So this is the last question before we call it a day. Please, if I have a 9 to 5 and also a business registered as a business name, my employer already deducts pay from my income. Am I supposed to still pay PIT on my business? And is it with my same tax ID, or will I get another tax ID for my business?
Thank you so much for that question. Yes. Depending on the developments that will arise in the next few weeks, what I can say regarding your question is, number one, apart from your payee, of course, by law, you should be taxed based on your income. So if, like I already said during the presentation, if you are making an income additional and different from your principal employment, the government should be aware. You should declare it. So at the end of the year, you should be ready to file your tax returns. And in your tax returns, you should be ready to declare that additional income you've earned so that you can be taxed accordingly. Talking about for tax purposes, you as a person, because in the course of your employer remitting taxes on your behalf, you already have a tax ID, which ideally eventually will be your NIN. But remember that I mentioned that the plan is for companies and business name to have tax ID as their registration number. So eventually what will ideally happen is a situation where you as the individual under your employment will have your NIN as your tax ID, and then your business will have the registration number as the tax ID. Eventually, when the authorities want to tax you, since you are together and they don't see both of you as different persons, they know how to consolidate everything, tie in both the income you earn from your salaried employment and your business profits, and then know the additional amount you are supposed to pay as tax in addition to what the employer has remitted to them as payee. So I don't know if I answered that part. That's what I think.
All right. Thank you very much. Thank you. Thank you for the session. It's been like we wanted to like round up by 8 p.m., but because the questions were much and we needed to like clarify everything, we need to clarify everything, make sure that we are all able to take everything that we need to take home. We need to take them into the new year. Thank you very much for your time, Mr. Olukolade. Thank you for the amazing session. We took a whole lot out of the session. Thank you very much.
Thank
We
you
can
for
appreciate our you can appreciate our facilitator as well. So next is so my screen is coming up. So on the screen we have our feedback QR code and link. You can scan the screen, you can scan the barcode on the screen to give your feedback. So we'd love to hear from you. How was the session? Is there something that stood out for you in the session? Please don't hesitate to share your feedback with us. So after the session, you definitely get an email from us as well. So in the email, you would have the feedback form, same feedback form. So if you have filled the form on the call right now, you don't need to fill the form again. So also you'll also be getting the resources, that's the recording and the resources, probably all the gazetted copies of the new reforms will be shared alongside the recording once we have the recorded audio and the video. And also for updates in the feedback form, you're also going to have a section where you'd pick if you want to get information or updates from My Growth Hub. So maybe we have any session or we are looking to bring in new members to join the community, you definitely get the update in the emails that will be shared with us. So that will be all from my end. And also, if you are looking to connect with us, you love what we do at MGH, you can connect with us on LinkedIn at My Growth Hub, Facebook also at My Growth Hub, and Instagram at My Growth Hub. We'll be happy to connect with you and grow with you. So thank you everyone for your time. Thank you, Mr. Olukolade. We can't even thank you enough for the consultation. To be honest, it's something that we would have paid for to get all this information. It's more like a consultation session with you. Thank you very much.
Interestingly, just to add, if you wouldn't mind, I imagine personally the new tax laws are a big source of concern, and I see that this platform is so important to discuss and demystify these things. But I also imagine that there may be so many other concerns that people may have, or questions, or the various challenges they have. So what I would say in closing, subject to the Growth Hub's of course discretion and Mr. Olajide's discretion, is in addition to reaching out to the Growth Hub, you may also, I hope I can, but you may also try to reach out to me on social media handles, especially LinkedIn or X. But then, of course, you can reach out to Growth Hub just in case you need to get in touch with me in that area. I'll be very happy to provide you with basic information on the new tax laws or other tax issues that may arise in the coming weeks.
Thank you very much for that opportunity. Thank you. So yes, if you need to reach out to him, you can reach out to him directly on LinkedIn. So in the email, definitely I'm going to hyperlink his LinkedIn handle and X handle to the feedback email so that we can reach out to him directly, send him a DM. He'll be happy to respond. And if it's something more like a community thing, you can also reach out to us and we'll be happy to help. Thank you, everyone. Yes, definitely blessing. You will get the recording of the webinar. Thank you, everyone, and do have an amazing weekend. Bye.